Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Monday, June 10th, 2019. Felt like it was a good time for an update. Just closed out the Intel long trade. I'm probably an enigma to most people out there as to why I'd close that trade out today. I'll get to that in a second. But and as I said in closing that out, it's up to you. You want to raise stops and let it run, no problem with that. But I want to go over the charts, just kind of share my thoughts. I think now is probably a good time as any. I'm going to start out here at the VIX because I haven't updated the VIX in a while. TVIX is under consideration as an official trade idea, but I'm waiting to see what the markets do today. Largely today, I think if we're going to get a reversal, either come today or tomorrow is what my guess would be. All right, so let's start out here. VIX, this is a pretty simple chart. I think you can probably see where I'm going if you just look at the annotations on the chart. All these divergent lows. I don't believe I've missed any, and divergent highs, just like the stock market in reverse, really, when you're looking at the VIX, because when the stock market drops, especially during sharp corrections, the VIX will rise. And so when you look for divergent highs on the market, you're usually going to see, not always, but often a divergent high. And these are big gains. I mean, these are all doubled well into the double digits, maybe even triple digit gains on these divergent lows right here. And just like the stock market, sometimes you'll have a nice trend line, not always, but sometimes you will. And in that case, you had a divergent low here, and that was the low. The VIX started moving up, kind of went around for a little bit sideways for a while, and then finally broke out of this level, had that rally, pull back, and it really didn't stop till it got there. So that divergent low was last fall. And we came full circle this time around when the market topped right around that time. We also had a divergent low in the VIX, which has since been moving higher. And like I said, sometimes you get these divergent lows. You get an initial thrust up, and then you take off. So we'll see. That's just something. Here's a divergence for those of you new to the site. Divergence, you have positive divergence when prices on a security are making a lower low like this, and the indicators down below. I like to use PPO and RSI are usually defaults on my daily charts. There's other ones out there. You can see a lot of them parked here on the side of my chart. But that's one of the things you look for, and that also helps to formulate. Well, we got the correction. We had the biggest correction of the year by far so far. So at this point, you can't say these divergences didn't play out. They helped align that better than 10% drop that we had in the Qs so far. Now where we're at, where we go from here, is that it? One and done? Are we over? Possibly, but I still don't think so. I'm still leaning towards the fact there's another big leg down coming. But here's a couple things to watch. Just watch, there's an uptrend line forming on the VIX. Potential. We had a lot of reactions there along it, but we haven't had one in a while. And you can also see support and resistance levels that are marked on this chart. This level that we're at now, where I'm drawing the blue line, about 1573, pretty big level. And why did I say that? Well, let's just go back in time. And I'm doing this because I often get requests from members, on how to draw trend lines and how to identify support and resistance levels. So you want to look for a lot of reactions around that point. This is a reaction from below, and the VIX is a whippy, volatile little sucker. It moves. The moves are huge. I'll try to put it for you here. That from that low to that high right there, that's 470%. Okay, so you have to, number one, use log scaling on your chart. Otherwise, you get a very distorted picture. That's what it looks like when I turn it off and put on arithmetic or linear scaling. So use log scaling on any securities with big price moves, because what it's doing, if you're wondering what the difference is, it puts all the candlesticks in equal percentage terms, not dollar terms. Because when you have a $10 security, if it goes up $1 or 1 point, that's a 10% gain, right, from 10 to 11. Well, if you have 100, that same security down the road gets to $100 a share, that same 1 point move is only a 1 percentage move, gain or loss. So log scaling will fix that. It'll adjust it for price to show you that a candlestick of this, pick one down here, that size, if it's up here, higher, a much higher price range, the security moved in the same percentage gain or loss is what I'm trying to say. So that's it. So what do I have here? I have the VIX coming off a divergent low, still above trend line. It's in an uptrend right now. Near term, it's hard to determine. To keep that uptrend intact, like it's another TA tip. An uptrend is simply defined as a security making a series of higher lows, which the VIX is so far, and higher highs. No, the VIX is not making higher highs. We had a reaction high here that needs to be taken out. So if it is, then obviously the VIX will be in an uptrend. And I'll tell you, if it gets there, if that high gets taken out, we're going to have a pretty sharp move down, pretty good reversal in the market. Otherwise, it could be a one and done. We've had some one and dones here from the divergent lows. That one was the divergent low. It looked like it was one and done. And then the VIX exploded. Here was a one and done right here. Divergent low, had a little rally. Nice gain. Don't get me wrong. It doesn't look like much there, but it was about 87-90% gain in the VIX. And so that's that. And trading vehicles. There's a lot out there. TVIX is the short. It trades. It's 2-time leverage and it trades short-term VIX futures. So I'll have to clean the chart up a little bit. But I've had a target. I've shared these targets in the past. Actually, after we put in this divergent low, 33.90, 43, and then about 61.17. If again, and that will be contingent. I can tell you with fact, if we're going to hit this or that target, it'll be contingent on the market dropping considerably, having turning around here soon, which I'll get to in a second. But that'd be about 180% gain up there to that 61-ish level, and if it gets here, that's about 100% double on your money. Cuts both ways. VIX is volatile, and you don't want to hold this against a trend. If volatility abates, if the market breaks to new highs, the TVIX, and over time TVIX will continue to lose money. It's an ETN. It tries to roll the futures on the VIX. The VIX itself has a set floor, not a set floor, but relatively. This is a 2-year chart. We can go back a decade, and you can see that the VIX will be range bound between about $9-10. This was an extreme period of low volatility back in 2017, and never before seen levels on the VIX. It's never gotten that low in history until that point. So you can see I have lines here. Typical bottom end of the range is about 1150, and that goes back for many years. And you can see, and you get these periodic spikes when the market corrects. So that's the VIX, and I just wanted to kind of let you know that ties in with my analysis on the market, which we're going to get to now. Let's start with we'll start with SPY. Strong rally so far. And on the 60-minute chart, I showed you some levels. This was my max bounce target here, 289, and we've taken it out. The day is still young. By all accounts, it looks like a trend day today. And if today doesn't prove to be a trend day, then that would be a little bit of a red flag. What a trend day is when a security moves higher throughout the day to close on or around the highs for the day. So a trend day would look like this. The buyers will come in now and buy up this dip, and we continue to go up and close green today on or near the highs. That's what a trend day is. This might have been like a trend day right here, for example. And those are pretty bullish, but they, sometimes they get faded the very next day. But right now, the bulls are in control because they popped that level, and as I said before, we'll get to QQQ here in a second. We had those bull flags. Sorry, I pointed out on Friday, and the fact we popped them, we also popped impulsively. So right now, by all accounts, make no mistakes, that is bullish. That's what you want to see. You don't want to see a bull flag break out and kind of have prices limp around and kind of move higher. You want to see, as I said last week, the whole nature of a bull flag pattern. You have a very impulsive move leading up to the formation of flag. You get a level of consolidation, mild profit taking, typically on lower volume, and then a breakout to the upside, which should be impulsive and on higher volume, and then you take the measured target, which is the flagpole, add it to the bottom of the flag. That's your target. And so unless it fails, that's bullish on face value. Now, I am not a conventional trader. You guys probably know that by now. I am an aggressive trader. I have a trading style I call anticipatory. I try to anticipate things that haven't yet happened. I'll take stocks before they break out. I'll sell into a breakout if I think it's going to fail, whereas other traders will wait until it fails. But at that point, you're going to be down here, back below the flag. So I made it clear earlier, I won't add shorts above 289 unless we get a big reversal today, and it looks like it's going to continue down, and especially if we come back down and down below the flag. That'll mean two things. It'll mean that we came back. If you see these dotted yellow lines right here, that's Friday's close. So a move back down there will do a couple things. It'll take us back down to, or especially below there, will take us below the bull flag. And number one, that's very bearish. because, as I often say, fewer things in trading are more bearish than a failed bullish breakout. In other words, when you have a bullish chart pattern or a breakout to say new highs, all-time highs, things like that, bulls pile in. If it fails, two things happen. Number one, the shorts pile in. They smell blood, like sharks, blood in the water. They pile in, and the longs, who all took the breakout, which what the textbooks say to do. That's a bull flag. You take it on a breakout because you're expecting a move up to equal the move of the flagpole. So those longs then realize they were wrong. It's their rut row moment, from Scooby-Doo. Rut row. They see the breakout failed, so they start to sell. So that's things that I'm looking for. That's what I'm still leaning towards, but it hasn't happened yet. So I'll sit tight on the shorts for now, and maybe if we start to see good signs of reversal, start to even add to those. All right, so the QQQ 60-minute chart here. There's your flag right there. There's a breakout. Impulsive check marks across the board for what you want to see. But again, I mentioned before excuse me, the 183 level was what I kept referring to as my max preferred bounce target, where I could see things going up here and I would continue to add to, scale into shorts up to, but not above that point. But then I have this maximum bounce target here where I'm not adding up to that point, but that's the point where I think the bearish case really starts to just get chipped away if QQQ can go above there. So I hope that makes sense to you guys. I know max preferred bounce target and then max target, meaning I'm not going to add up to that level. I'd be digging myself. I had a predetermined plan to scale in, stick with it. And I actually, yes, today added some, but up to that point when we went up there, hit that level today, I put an update out right after the open when we were there. But I'll only add now if we fall back down below there. And probably that 183-ish level, 182, 83, 93. So that's that. And, I always share my thoughts where I think things are going. You guys trade, take trades you like. Don't take the ones you don't like. Use your own stops. I'll get to the Q. Well, let's just look at that. QQQ official trade is what board did I put on? Board number 6. There it is. That's the trade. And I just want to say this. I had several questions when I posted an update, and that's fine, guys. If you have questions, that's what I'm here for. But several questions about the stop. And the trade parameters are always listed on the official trades. Now, the official trades, it'll be made pretty clear. If I put a trade ID on the front page, I'll say if it's not official, it means my confidence isn't the highest, and I'd still like it. Here it is unofficial. Take it if you want. If you want price targets, if I didn't give you any, let me know, and I'll give you those. But the official trades have all the trade parameters, and that trade parameters include three things, a few things. Number one, your entry price, and it's around that range. I know by the time the post gets out or you read it, as long as the security is somewhere near that level, that's your entry price. It has price targets that are well defined. I always set the price targets on long trades. If we're going long, I would set the target a little bit below the resistance levels that I expected a reaction, or I expect a reaction, because I don't want to miss a fill. Likewise, on a short trade, for example, you see that first target's at 169.85. I'll set it a little bit above the actual support level, which is at 169.22. I do that because if a lot of eyes are on a level, sometimes the buyers will start to step in early, and so I do that to not try to get greedy and try to milk every last cent out of the trade at the risk of avoiding missing a fill, because when things reverse, especially after a sharp sell-off, they can reverse very fast, and so therefore you can watch some really nice gains evaporate. So that's my trading style. At the end of the day, these are suggestions. These are things I see where I think a security is going. The suggested stop and the targets are all based on an entry price around that time. If you have a different entry price, let's say, for example, you shorted QQQ today at the highs, you might allow yourself a little bit wider stop because now you have more profit potential to the targets. I typically use around a 3-to-1 or better risk-reward ratio. That can vary on the trade, of course. And it, by the way, very important, it's calculated usually to the final price target. So if you're only going for the first target, you should use a tighter stop. I don't list multiple stops, stop 1, 2, 3. The chart would just look like a Christmas tree. There'd be too busy, too many lines. So just keep that in mind. And then, as I made clear on this trade, it has the potential to morph into a lot more. And I may have even been liberal with the 3-to-1 risk-reward ratio, because if we get anywhere close, if we reverse soon, hit that first target, at that point I'll most likely be adding the targets, because at this point right now, the market, if it can't go to new highs after this rally, then I think it'll just prove to be another counter trend rally. And I wanted to share that. I posted this chart. Let me find it for you here. Was that chart number board 8? Hold on one sec. Okay, well, let's start here. Let's just start with this one. Here's QQQ, a daily chart, and you can see I don't have fully marked up. Here's all your divergences. That's a rising wedge right there, as is this one. And here's your divergence right here at the high, the steep part that drops off there. We had what I call about flatline divergence, roughly equal highs there. And so you had a wedge break, back test, and then the big move down, and wedge break. So let's look at how that fourth quarter drop played out. We had a breakdown and a back test, and then we started moving impulsively lower. So this whole correction here, well, was more than 20% drop. You could call it a bear market if you want. You had one counter trend rally there. You had another leg down. Second counter trend rally, another leg down, and a third with the final leg down. And you can notice the first counter trend rally was smaller. As a correction gets going, a major wave, you usually that second big drop is often the largest. You can look at Elliott wave counts and primary wave 3, but that probably wouldn't fit well here. But I just wanted to point out that you had that initial thrust up, just like we did here. We had a drop, and at that point, I mentioned covering a lot of shorts and going long for a counter trend bounce. It was very quick. I didn't expect a long, so I didn't make it official. But I made those thoughts, my thoughts clear on the site at the time, and then we had the next leg down. At which point, we were covering QQQ short was covered here, but I mentioned we had those 60-minute divergences, oversold on the daily, everything else, and warned of the risk of a sharp counter trend bounce. So one counter trend rally, and so far 2. Now, here's $1 million question, and we'll only know in hindsight. Is this done? This was a healthy correction based on the wedge. It was larger than the wedge projection, as was this one. Sometimes you go much larger than the pattern projects. And again, I'm working off the weekly charts, which we're not even going to cover in this video, which are quite bearish. A lot of technical damage done there recently. So there's a big question. Is this rally, which is stronger than the first one, and that is normal, by the way. You get the first correct kickback rally, and then you get a bigger drop, and then a bigger kickback rally. Is it enough? Is this correction over? Are we going to new highs, or are we about to take another leg down? Well, let's look at this. Here's that drop back then from started in October. The final high here was in October of 2018, and I measured these out for you. That first kickback rally from right there was 6.23%, and I posted this chart under one of the updates on the markets today on the front page on the comment section. So you had a 6.23% kickback rally, 9.68, and then 10.3. You can see they started getting larger and larger, but these were both right around 10%. I did this earlier today. Well, I'll measure it now for you and update it. There it is, from low to high so far today, about 9.33%. So about on par with these, even a little shy. And you can see this one was a little shy of that first kickback rally there. We had a 4.84% kickback rally there. So my point is this: right now, as convincing as that seems to I guess the untrained eye, that we can't possibly have such a strong rally if we're going lower. This has to mean that the correction's over and everyone's buying or going to new highs. It could, and it very well may not. Again, this is about the same amount of time. Let's measure it out here in days. Let me grab that candle right there at the lows, which the 9.68% rally, and you can see my pop-up box to the left. That lasted 9 days, 7 bars, 7 trading sessions, or 9 calendar days. And how did it end? Well, remember how we ended on Monday? Remember when it looked like the markets look like death, and as I said, the news couldn't possibly be worse. The headlines were just, it was like reading a bear encyclopedia. I mean, just one bearish headline after the other, economic indicators rolling over, the government going after the big FANG stocks, trade war worries, Mexico, China, and all of a sudden everything's hunky-dory. My point here is that there's an expression in trading and investing. It's always darkest before the dawn. Well, that's how corrections usually end. That's how they ended back here, and that's how they ended here with big red candles. And then boom, all of a sudden you turned around and you rallied up about the same amount of time, the same percentage terms, and then you continue down. So that's all. It can go either way. Just because this bounce so far matched those doesn't mean that it has to play out the same way. All point I'm only trying to make is it very well can, and there's not a single thing in the charts that tell me that it can't or it shouldn't play out that same way, if that makes sense to you. So just wanted to share that and let you know that, oh yeah, and the way they end too, you see the big green candle here. In fact, of course they're going to end on green candle. Well, not always. Sometimes you can get a reversal candle, but there it is. Big green candle. Everyone's buying. Everyone's thinking it's over, and it wasn't. So we'll see what happens here. And I'll say this too, that it's not just that the fact we're kind of moved up about as much as we have there. It is part of what played into my decision to close that Intel trade early today. And as I said in the post that went out, that's up to you. Everybody, I clearly, I even gave you a suggested stop. If you're in it, move your stop up to about 45.53. Why that level? Well, I'll show you why. Because it was just above the first target level. This first target was right here. 45.82 was the actual resistance level. I had the first target at 45.81, and it's a pretty significant level. We had some reactions there, and then we broke above it. We had reactions from above. You can see a little consolidation. We started moving up. So this is what should hold on a pullback, and that's why I set the stop a little bit below there. If you want to use a more liberal stop, if you're bullish, then again, this level, I told you this trading range recently, the top of which was about 45, 45.10. That's a very, potentially powerful basing pattern there on Intel from right here to here. I'll box it in. And that would be worst case scenario. If you want, again, if you're in this trade or you're looking to buy a pullback, you believe the market, or at least Intel's going a lot higher, that would be a level. So then you can use a stop a little below there. So those are the levels. I felt better closing it out today. So far, I closed it at 47.18, I think, and a high was 47.19. So we left 1 penny on the table so far, but again, the day is early. On all counts, this chart to me looks bullish because of that consolidation, the divergence low, everything that I mentioned, why we took the trade looks to be playing out. But I am still leaning towards the fact this is all just one big bull trap, last suck-in move on this counter trend bounce. And if so, that's going to be very bearish if all these stocks reverse here soon, just as they start to get looking good. Because that, as I've often say, it's a trait of a a bear market rally. They look very convincing. They suck in a lot of longs. They squeeze out a lot of shorts, and just when it looks like things are getting going and there's a lot more upside, it turns around on a dime. So we'll see. I can't say it's that yet until we get those reversals, but that's Intel. Just to speak to this a little more, let's go here. Well, part of the reason again for this long trade is I had very good support here at 43, a big level. If you're new to the site, so I'm kind of rehashing this trade, but it also speaks to my outlook for the market. So we have, huge support there, lots of reactions. Again, this is trend line drawing. You see that reactions, you see a big gap right there. So I had a support zone from 43 down to about 41.64, with this being the more significant level, a lot more reactions. That's why we bought Intel right off on that pullback. And, looks like it could still go up here. This correction could be over. Very oversold. You like to buy oversold on the daily, but there's a couple things I see here now. The 50 level, which is a dotted line on the RSI, often acts as support or resistance when tested from above or below. You can see it here. During downtrends, pushbacks on the RSI to 50 often reverse stocks, the price reverses. That's where rallies end. You can see there, there. You see all those caps. Or in an uptrend, a pullback to the 50 level is bullish. So that's one thing going on right now with Intel. And then longer term, hold on, let me clear that out. Longer term, and if you're new to the site, I'll recap this. This is my weekly chart of Intel. I show you the corrections in the past that have come off divergent highs on the weekly chart. Right here, trend line breaks, 14, 34, 35, 28. And so back in 2018, I was monitoring this bearish, but saying we won't have a sell signal yet until this wedge breaks. And when the wedge breaks, I had put out quite a few updates on Intel. I said I had two targets. This one right here, 42.59 and 38.24. So when the wedge broke, we hit my first target. At that point, I expected a reaction. That was drawn out in the scenario. I didn't expect it to go this high, but when it did, it just put in a divergent high, and that only made the longer-term outlook even more bearish, and even increased the odds, and still do, that my second target will be hit. Forget about that 32%. That's what I posted way back here before it even broke down, where I expected after the first target was hit and we had a reaction, we'd go. So what's happened? We came back in and we fell to that level again. And remember, it's support. It's a big support level. That's why I even bought it long for a counter trend rally. However, I expect it to go. I don't know how much more this upside left, but the fact that we already hit it here once, I expected a more minor reaction here. So this is what I'm expecting in Intel. So hopefully that kind of, and it also ties in with what's going to happen in the stock market. I think if Intel is going to drop another, let's just say I nailed the exit today. Well, time will tell. And it's going to drop another 19%. It's probably not going to, Intel's probably not going to drop 19% if the market doesn't take another leg down. So there's kind of my thought process. And just like that QQQ short trade, which I know a lot of people were perplexed, why would you short it? It's looking so good. It's based on these long-term charts, which when you get these divergences and the sell signals that follow, they're pretty high probability setups, and they override short-term bullish developments like the breakout in Intel today. I put a higher weighting on the long-term technicals than I do on the short term. So again, near term, it's really hard to say, but if you ask me, even if Intel has another 7, 8, even 10% upside, I would put very good odds that it comes down to this level, 38, 38-ish, before it takes out the previous highs and makes a new all-time high. So hopefully that's the easiest way to put it there. Okay, and a quick heads up too, because I did get a flurry of questions on the stops on QQQ today. Here's how to use the site. I need to get a video out there, I know, to make this a little more clear, but to catch any trade idea, go up here to trade ideas, hover on that, come down. For example, QQQ is a short. It's our only short trade right now. And that is, of course, speaks to the fact I've been bullish on the market now for weeks, looking for a bounce and position that way. We've had a lot more longs. But if you want to get the details on it, you can see there, if there were multiple posts on it, we just added it Friday, there would be more down here, and you can click on that. I'll show you on the long side. So if you click on the trade idea, the trade parameters will always be inside the post. Again, you'll have the entry, the entry price. There's a difference between a trade setup and an active trade. This was added as an active trade, meaning at the time I posted it, go ahead and enter the trade if you want. But I also mentioned, of course, it was aggressive counter trend trade, so you have to keep that in mind as well. That was there it is, aggressive counter trend trade. But and then the rest of the trade parameters down here. Price targets are listed as they are on the chart as well. Suggested stops and the suggested beta adjusted position size. So those are the main trade parameters: where to enter, where to take profits, where to stop out if wrong, and how much to put in the trade. And if you want to click on any of the charts, of course, they expand. You can use a scroll wheel, which I'm doing here on my mouse. Zoom in, out. You can move them around, pan. So if you zoom in, you want to really hone in on a level to kind of replicate it on your own chart. That's all part of what what you can do with the charts when you're logged into the site. And then, of course, up top here, you have a trade size position calculators. There's 2 of them. Use those. Somebody mentioned the trading room. They were feeling heat on the QQQ short trade. Well, they might have shorted somewhere else, but if you shorted it to Friday, We shorted near the highs, and we're only up 1.6% on QQQ today. I'll say this: as a swing trader, if you can't take if a 1.6% loss is giving you heat, then I can tell you right now, and assuming if a 1.6% loss on a swing trade, especially one that you're going for potentially double-digit returns, if that's too much, then this is where you're going wrong. You're risking too much of your portfolio, and that's what these will do. Is you plug in the parameters, the entry price, your targets, all that. It'll give you risk-reward ratios, how much your count, you're willing to risk, how much dollar loss you would have. So go ahead, play around with those guys. I think they're useful tools, and position sizing and diversification is everything. And then that leads to the final thing, trade ideas. Here, for example, we go in longs. I'll give you an example here. We have the different longs. Asset allocation, diversification. If QQQ is your only position in your entire portfolio, or a big chunk of it is there, and you're short, well, that trade's going against you today and you are feeling pain. However, if you are diversified, for example, you have our KHC, this is a swing trade and a long-term growth and income trade. Click on that. Trade parameters are there. We entered that at, was that $28, 28.07, and then we look at today where it's at. And guess what's happening? Well, if you've diversified, number one, your Intel, you're up quite a bit today. You're up as much as QQ is down in Intel. We just closed that out officially. And then KHC, you're up 4.84. You're up over almost 3 times what the market's doing. It's close to the T1 right now. This is diversification. Yes, this is a stock, but this thing has not been correlated. In fact, the correlation has almost been inverse to the stock market. So this one can actually, even if my correction call for another leg down plays out, this one could continue to rally because it's washed out. That's why I bought it. At least I believe it is, and I made a case for it. So there's that. And again, that goes back to diversification. And then, of course, things like coffee and the other trades that we've had. Yes, down today, but again, very profitable so far. We hit the second target on that one, and at the time I said expect, we had negative divergence on coffee and wheat, and I said, odds for a pullback were pretty good. So as of now, sticking with these trades. But so hopefully this video helps. I hope it help you to navigate the site, get the info on the trade ideas you want, hopefully I did a good job of sharing my views on the market. And let's just wrap up there, getting back to that QQQ again. We're so far a reversal here. Still, the day is very young, but I closed the Intel trade out. Again, it's more of experience and gut feel. I usually don't close trades unless there's a compelling reason to do so, and I can literally I can sit here and make nothing but a bullish case. So it's intuition and gut feel as to the market reversing here soon, probably today, and then continuing lower this week as to why I closed that. But again, you can set your stops anywhere you want if you like this trade and let it run. And if I'm going to be wrong on the market, I'll probably be wrong on Intel, but I'm not going to lose anything. Locked in 6% gain today. Take it, move on to the next one, and that's that's how trading works, or at least my trading style. So we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.